Brian Barish, president of Cambiar Investors. Brian, good to have you back on the program. What do you think of this news flow coming through from S&P? Did they tell you anything you didn't already know?
Not really. I think the world has begun to behave as though there is no such thing as a risk-free asset, and that's one of the reasons why we've seen a lot of volatility. It was interesting that they put basically the entire European monetary union on credit watch, meaning that the problems that we see in Italy and some of the other weaker core countries affect the core. I thought that was interesting.
And what about the threat to strip Germany and France of their coveted AAA rating? That does have a bit of a knock-on effect, because what happens to the rescue fund, the EFSF, especially as they want to issue bonds? Are they going to be AAA rated?
Well, probably not if they strip Germany and France of their AAA rating. I mean, this goes on the back of stripping the United States of its AAA rating, basically because our politicians have not been able to behave in a AAA type of way. In Europe, it's been a combination of the politicians and the central bank not behaving the way a central bank is thought to behave. And the net is, in the next few weeks, a new version of the European plan is going to be articulated. My feeling is there will be continued iterations of this plan. I don't think this is going to be the final version of it, so to speak. Markets are going to have to continue to try to digest this stuff. I will say what's very encouraging is to see a pretty big move upwards in bond prices for the European peripheral countries just in the last few days. It seems to me that there's a recognition that there's some value in some of those peripheral bonds if the whole region is able to pull together.
Yeah, Brian, I got to say, this instability in the markets must be making your job pretty tough, especially as you're looking for a long-term investment. So what are you doing going to year's end? What are you holding? What are you getting rid of? And what are you doing, period?
Well, in any given year, you have your outperformers and your underperformers. In 2011, more pro-cyclical type of businesses have underperformed, and more acyclical businesses have outperformed because people are worried about economic contraction in Europe and contagion affecting other markets. So that means, to me, that there's probably some interesting opportunities in the more pro-cyclical stuff. So we've been adding to positions in industrials, in energy, a few tech type of names. And I think the thought there is that, while those are pro-cyclical, while they may see their revenue growth dampened by global considerations, we don't see a 2008-2009 situation erupting. It seems pretty clear the Eurozone is going to prevent a Lehman-type situation from happening, and to the extent that they're able to avoid that, we see a lot of value in those businesses.
What makes you think that the Eurozone is going to avoid a Lehman-type event? I mean, some are still talking about Italy maybe going under, but what are you expecting from this summit on Friday?
Well, I think what you're going to get are some clear rules of engagement from the European states. Basically, the ECB is not going to bail out profligate member states. They're going to have to sign up to essentially operate on a straight and narrow path that's been dictated by the Germans and the French. And if they do adhere to that straight and narrow path, the ECB, it's my understanding, is going to intervene at that point and prevent bond spreads from widening out the way that they have. That's terrific news. If that occurs, that means the European Central Bank is acting the way a central bank should. What we still don't have clarity on are capital rules for the European banks. They're being asked to increase their risk-weighted capital. That's a difficult thing to do if everybody tries to do it at the same time, and that's been one of the reasons why bonds for European countries have been so weak. The banks have been dumping the bonds. So we're still waiting to see exactly how that process is going to unfold. I think what we're going to hear are kind of rules and a playbook. How much actual action takes place, that may not actually occur until the first part of 2012.
Okay, we'll be watching out for it. Brian, thanks for your time today.